Before I sort of look at the chart in a little bit more detail, just answer a couple of questions. Someone asked if you're on MT4 and will MT5 give you the flexibility of NinjaTrader, only to the extent that you will have more time frames on MT5, but they are just time-based. You won't have tick charts and you won't have second charts on MT5, but you certainly have a much wider choice in terms of the minutes charts. Those of you who are on MT4 will know there are, you are restricted to whatever the platform offers. So you'd have to go to a platform such as NinjaTrader, and we will be having TradeStation coming up soon. If you want to trade futures and have the VIX, you can trade a version of the futures. It's a synthetic it's not the actual futures contract on I think MT4 and MT5. In fact, I've got some here. So if I just bring it up here, I've got this workspace called indices. In fact, this is the FTSE 100. It's called the UK 100 cash. Because brokers know that traders like to have access to all sorts of markets these days, even forex traders. So that's the US 30 cash here, which is the equivalent of the Dow Jones. The values were pretty much the same. They will track the cash and the futures market. So you can trade these other markets on a platform such as MT5, but if you want the actual futures themselves, then you will have to have a specialist broker and a platform that offers the actual contracts themselves, the contracts that David was, which is the e-mini version of the futures contract. Ninja, TradeStation, those are the two big platforms that our indicators are optimized for, but there are lots of other platforms and brokers out there. And with regard to the recording, we work on it pretty much straight away after the session is over, and it's just how quickly David can do the editing. What we're trying to do is chop these up into smaller sections rather than have the whole. I think we'll be going almost an hour, and we were finding that, to be honest, most people don't watch the whole hour, which is a shame because there's obviously lots to say. So we thought, well, if we chop them into smaller sections, it might make it easier, if you like. And Rory, I don't know. The question is, what's the Renko showing? Were you on some charts, David? You on some time charts? Yeah. What I'll do is I'll pass that back to David. He's just is that okay? If that's okay. The dollar shortage increased. Interest rates at the moment, I really won't worry too much. It's nothing to do with interest rates. The dollar shortage is a liquidity problem. It's just that it's everything. The dollar is the currency that really lubricates the international trade and markets. People borrow in dollars. They have dollar denominated debt, and when that debt has to be paid back, they have to go and buy dollars, and that pushes up the value of dollars. And this is also part of the reason why, not this time, but the time the previous week, when the Fed stepped in and they had to make lots of dollars available, because if you have a crunch in these transactions and there aren't enough dollars, then you are really going to cause some serious damage to the global economy. Damage is being caused obviously by this medical crisis that we have at the moment, but the dollar liquidity. The dollar is what it is. It's the currency of first reserve. It's a very powerful currency. You may not agree with, that the dollar should have all this power. With power comes responsibility, but that's a discussion for another time. Everything is priced in dollars. Commodities are priced in dollars. And whilst before all this blew up, people, the Europeans, the Chinese, they were trying to move away from the dependence of the global economy on the US dollar, but really they haven't been able to do it yet. No one wants yuans, and I'm not sure they even want euros at the moment. But again, that's a discussion for a future, for another day, as it were. Just wonder on that sell-off, what the Renko and time charts you were showing at the start would have been showing for that to see. Right. I think, Rory, what I'll do is, can I just just do what I want to do here, and then I'll pass back to, it's going to take me a few minutes, David. Is that okay? Right, what I've pulled up here, we're talking about Wyckoff. And it was just a really nice example. This is the pound yen. When I said to you that one of there are these 3 laws that that Wyckoff has come up with, and one of them is the supply and demand law, and which is accumulation, distribution, and points of reversal. Where we had a really nice point of reversal based up here for the pound yen, based on a 2-bar reversal. If you overlaid that on that, you would end up with a shooting star, which actually started this move lower for this pair. But look at and also look at the volume underneath that move, which is great. That move, that volume is confirming to us that that is a valid move. So that is VPA 101. Then the move comes to a pause. As it does, it actually support and resistance is a hugely important element of VPA. It's one of the 5 pillars of VPA, and that's support and resistance based on price, but also support and resistance on volume. This resistance up here, although these 2 candles pushed up through it, this is a volume-based resistance based on the histogram here from the volume point of control, which we're not going to talk too much about it today, but just you know, just make a note that support and resistance, how we look at support and resistance, not just price-based, but also volume-based. So you get 2-bar reversal. Yes, it did push slightly through, but support and resistance lines, zones, you have to be a little bit flexible with them. The chart pattern actually confirmed that there would be some kind of reversal. That reversal we know is a genuine move. Why? Because the volume is going higher. Then we have an attempt, so let's take that as now as the start of a primary trend. That was the primary trend higher. We did actually get a reversal. This, as it subsequently turned out, it wasn't just a pullback from the trend high, it was actually a reversal from primary to primary. Then it bumps along sideways, and we look at the volume underneath. That candle, volume really not very supportive, is not going to go very far. Then it hits the resistance again, where here we have price-based resistance and volume-based resistance. Then we have this candle, which is really, this volume bar and this candle, which is really interesting. Look at this spread of this candle. It's a very squashed candle. Look at the volume underneath it. Effort and result. That is not that is not genuine. It's not a genuine, not genuine. It's not, what's the word I'm trying to think of, David? Not anomalous. It's incongruous. What am I trying to think of? I can't think of the word. But essentially, for that kind of volume and that kind of price spread, you would have expected that to go much, much higher. It hasn't. So it tells us that this price, that much of effort, that's right. This much effort should have produced a much better result. It didn't, it hasn't. And it also hasn't because it's hit this important resistance area here. Then we have some more selling in, we have a little bit more of sideways. Then we have this candle with a reasonable amount of volume underneath it. And we know we have weakness. Again, how many times does the price actually hit or attempt to go through this level? And the more times it tries to hit it on a price-based basis, this line, I don't know if you can see it, it's a little sort of hatched blue line, that will get thicker and thicker. In fact, the red line under here, you can see that that is a strong line of support. But what we then have, we have a down candle with a reasonable amount of volume. We then hit the volume point of control, which is where for the time being, there is balance between the buyers and the sellers, and if you like, there's a little bit of congestion. And the most important, if you like, candle and volume here is this one here. You've got a pivot. I think that's that one, isn't it, David? Is that one there, or is that the next one? That's the next one down there. I can't read my candles, but you've got a bit of weakness there. But what we want is, sorry, is this one here. It's the break away from the congestion. What we have is we have a deep candle. There is a wick at the bottom of the candle. I accept that. There's a little bit of price support coming in. But look at the resistance that is now ahead for this candle, and look at the volume underneath it. And that tells us this is likely to be a very big move lower. And we start down. And then we come to this candle here. Again, a lot of effort, but not a lot of result, which is telling us that this is this trend lower is going to continue. And in fact, if you follow it lower, the price keeps going lower, but look at the volume. It is falling away all the time. And what that is telling you is this move is now coming to an end. So we had a primary trend higher. We had a nice reversal. We had Wyckoff's law of supply and demand, accumulation and distribution, a reversal, a move down, a little bit of sideways congestion because nothing moves in a straight line. The volume is telling us whether any of the moves under these candles is genuine or not, and that is the one that is the most telling, if you like, where you have a lot of effort going in for not a lot of result. So we know, yes, there has been an attempt to move higher, but it's really not, not going very far. Hits the resistance and support, price-based and volume-based, congests a little bit more. This is the key candle. This is the one that tells us that, you know what, there is going to be some serious selling under here. I know it's got a wick to the bottom of the candle, and there's always buying coming in, because in this, in all markets there are limit orders, scattered around the charts coming in. So, buyers will always coming in, sellers will always be coming in. But look at the height of this volume bar. It's the highest of this particular section of price action and time. And we know this is coming to an end because the volume is fading away. Then we go back up again and we see the volume rising, the price rising. What do we see? We see the volume falling again. But we know we're going to hit some serious resistance at the volume point of control. We've got volume resistance, we've got price-based resistance. So is it any surprise that the pair roll over again, and now it's going to have another attempt to move higher? But the thing we have to be aware of now is the time, because it is now 6:15 here in London. The only market that is open at the moment is the US session. The deepest liquidity is in London and Europe. So we don't know, given that this volume is falling, because we have to read volume in the context of the session, and for Forex that is hugely important, and it's got a big ask, if you like, to get through this region here. The chances are it may simply move sideways for the time being. So that really explains, as I said, what did I say? Two of the laws beautifully, the reversal, supply and demand, and the effort and result. And it's really the effort and result which help to keep you in a move, because once you spot those, you will relax and you say, do you know what? Yeah, I can see what's going on, but actually this is going to carry on out. And of course you would be looking at this in multiple time frames as well. Right, let me just see if there are any questions very quickly. Fine, thank you. That's lovely. Fine, brilliant. And as I said, all these indicators that you see here, we have developed to support the volume price analysis method and the Wyckoff laws as well. Right. Have you answered all the questions, or do you need to come back over to you? Brilliant. I'm going to wrap. Shall I wrap up, or do you want to come in? I have actually, yes, just very quickly, just to remind you all again. This is where you'll find details of the indicators that are on the charts. It's at quantumtrading.com, as you can see. MT45, NinjaTrader. We do TradingView. TradingView doesn't have the full set of indicators because it's the code. It's the code that the platform uses. Our indicators require a little bit more than the code that is available on TradingView, and we are also working on TradeStation as well. We are back tomorrow morning, where we are back for Forex for the London session. So I know some of you will be coming along to that. So we will see you then. And then for this session, we're back next week, aren't we, darling? Yeah, back next week. So thank you so much for coming along. The markets are certainly well, it's unprecedented, to be honest. I think it's a combination of 2008 and probably a great dollop of the Great Depression, which is a bit depressing, but we will see. But the most important thing at the moment is that this dreadful virus is put under control, and we minimize the number of people who we know will sadly lose their lives. So, you know, sorry to leave on a bit of a down note, but that's just the reality out at the moment. And as I said, as we as traders, we simply look at the charts and you know, we trade what we see. I think more and more people will want to trade in the future because it's a very the future is always uncertain, but I think there's probably even more uncertainty now. The world is going to be a very different place in a few months' time. But as I said, the priority at the moment is the medical situation. So please take care of yourselves, stay safe, and we will catch you next time.